We have yet again another very important Tesla stock update. You're going to hear from Gary Black as well as Elon Musk on various different topics. Even some news that we seen yesterday, Elon apparently has no idea about. This takes me by real surprise, but nothing ultimately is surprising anymore. On top of that, we're going to look at what's going on in the markets. This cup and handle formation is, well, starting to really be confirmed. This comes after Moody's just downgraded the U.S. economy at about 5 p.m. Eastern Standard Time on Friday. Markets had a little bit of time to react to this, but this could be good and bad at the same time for our stock market. We have all of your Tesla stock news. Everything you need to know. We're going to look at the option activity that we seen on Friday, as well as the week ahead option activity, where are hedge funds and institutions positioning their portfolios, and so much more, including final Giga Shanghai production numbers for October coming in at about 82,000. And 28,000 of which being the Highland. If you calculate this out, that means that about 37 Highlands are coming out of Shanghai every single hour last month. That's about one every 2 minutes. That, I would say, is pretty impressive for this new model of the Model 3 that launched about a month ago. Given how successful the Highland ramp is now, that leaves me pretty excited for the Cybertruck, and really especially now since Elon killed everyone's hopes and dreams of a successful launch and a product that is accretive to margins in a positive way. Well, I think there's an upside surprise coming there. Tesla stock was up 2.22% on Friday, seeing a solid recovery from the low of the day at about $206, closing the day at $214.35. You are seeing incredible bounces from Tesla. Even on your red days, you're getting quite the bounce. And this has been happening for a while. It seems like this whole zone really in between 220 and 200 is a big demand zone. Even that 6% or so drop you've seen on November 9th, well, there was so many different things affecting Tesla that there was ultimately a big fall coming. There was no other way around that. It was UAW fears. It was so many different things. Bond yields rallied like 13 basis points on the 10-year Treasury on November 9th. Those things are just not going to be good news for Tesla. But seeming that you bounced 2% on Friday, now you're at about the midpoint you've seen on November 9th. It's really a toss-up, technically speaking, where we go next. That's why next week's inflation report will be very interesting, and we'll take a look at that as well here in this video. But I want to get into the option activity first things first. It can give us a glimpse on how hedge funds and institutions are positioning their portfolios in Tesla stock for the week ahead. On Friday, you had 971 hedge fund institutional trades worth $1.48 billion with a positive order value of 52%. So considering the stock was up 2%, it wasn't that crazy strong of a day. But relative to what you've seen on Thursday when Tesla was down 6%, you had a positive order value of 16%, one of the lowest numbers I have seen for Tesla in a very long time. This is really, really low. The lowest numbers I've ever seen were like 12%. So you were pretty dang bearish on Thursday. That's a sharp change. 16% to 52%. I will take that, especially for a Friday when you can have uncertainty over the weekend. For next week, on the call side, you have open interest of 48.77%. On the put side, about 51.23%. It's pretty close here. Put call ratio of 1.05. There are more puts on next week than there are calls. That's not exactly what you like to see, but it could be much worse. You could be 30% for the call open interest. And you're not getting a clear, concise direction based on just the open interest itself. If you take a look at the volume on Friday, about 55% of the total volume were calls and about 45% of the total volume was puts. This upcoming week's option expiration is a little more on the interesting side because, as you typically do, you're seeing a lot of your activity close to the money. The 215 call seen 56,000 for volume on Friday with open interest of 16,000. Anytime that you're seeing volume like 2, 3, 4, 5 times larger than open interest, that tends to be a good sign that people are positioning in that certain direction. So that's something I really like to look at. Now, you also seen the 217.50 call had open interest of 8,400 and volume of almost 63,000. So the bulls were definitely in control of Tesla stock on Friday. Compare this to the 215 put with open interest of 15,000 and volume of 17,000. Not nearly as impressive. The 205 put had open interest of 10,000 and volume of 38,000. Again, not as impressive as 8,000 open interest with volume of 63,000. What's the most interesting about this week is you're seeing a lot of activity around the 250 call, which is quite a distance out of the money. If Tesla stock is at 214, that would be a what, like $30 move from here, $20 so move from here. The open interest at 32,216. So there's a lot of contracts being held in people's brokerage accounts right now. And you did see volume of a little over 50,000 on Friday. These are options that expire in the next 5 trading days. Someone's betting that Tesla could move big next week. Next week, you have a lot of data coming out, but by far what's going to be the most important is your CPI. This comes out Tuesday at 8:30 in the morning. Your month-over-month core is expected at 0.3%. If you come in low, like 0.1, 0.2%, yeah, the markets are going to go absolutely crazy to the upside, okay? Because we were at, 0.1 essentially in June, July-ish. You've only recently started to rise again on your core. Now, your core year over year is expected at 4.1%. That would be the same as last month, and that has seen a steady, solid decline over the past really year, 18 months or so. You haven't seen any major spikes there. So 4.1% or less, I'm okay with that. Your month over month matters the most. Headline inflation month over month is expected at 0.1. That would be very good news for stocks. And your inflation rate year over year is expected at 3.3%. Last month was 3.7%. So that would be a big decline. And I should say your headline month over month last month was 0.4. So if you come in at 0.1, that would be, I mean, insane. That would be very good news. Now, if you get headline and core coming down big time, well, that could potentially alleviate some of the concerns that are starting to grow about inflation expectations. Nick Timiraos, widely seen as the Fed's mouthpiece, wrote this post on X about the University of Michigan's Consumer Sentiment Report that came out on Friday. We went over this, but you've seen another jump in 1- and 5-year inflation expectations. He says, quote, year ahead inflation expectations inched up to 4.4%, indicating the large increase between September's 3.2% reading and October's 4.2% reading was no fluke. Long-run expectations rose from 3% last month to 3.2%, a 12-year high. And he says, Powell was asked about the University of Michigan October survey at last week's presser and sounded the opposite of alarmed about recent expectations readings. Quote, we look at many things and not just the University of Michigan survey. It's just clear that inflation expectations are in a clear place. There's no real crack in that armor. You can always find one reading that is a little bit out of whack, but honestly, the bulk of them are just very clear that the public believes that inflation will go down. That was before this survey came out on Friday. And when you look at this chart, I mean, it's hard to say inflation expectations are well anchored, especially on the 5-year inflation expectation. That's breaking out to a new high. That's higher now than when inflation was literally 9% on your headline CPI back in 2022. Yikes. 1 year ahead inflation has come down a lot from the peak of almost 5.5% to where you are now, just under 4.5%. But it's definitely rising at a sharp pace. So if you are a bull in this market, you almost have to see a good inflation report next week. If you do not, then you're going to be in for a problem. Now, next week on Wednesday at 8:30 in the morning, you're also going to get retail sales month over month and PPI. Specifically, you want to pay attention to the economy here. There's two things that are going on, and there's really two ways this thing plays out. Either recession, and that is Fed rate cuts. That is not good things for our markets, right? Recession's not going to be good. Or the soft landing. That would be inflation comes down, the economy is doing okay. Maybe it's not doing great, but it's not falling into a recession. That's your best case scenario. That's rate cuts. That's avoiding your recession. That's good for stocks. But if you see inflation plummet, that's great. But if you see the economy plummet, that's not great and wouldn't be great for portfolios. So retail sales, considering GDP is consumed of about 70% personal spending, well, retail sales are going to be very important on Wednesday and could be almost equally as important as the CPI report itself. All of this data comes at a very particular moment for the markets. You are seeing a long-term cup and handle formation. Now, as you can see from this chart, when you see a cup and handle and you break out to the upside of this handle, which is really the downtrending line of resistance, once you break that and find that as support, you can go higher than your cup pattern. If you were to kind of draw a line here, I mean, that would be you breaking out of all-time highs for our markets. And that is what is starting to happen. I just think you need a little bit more confirmation, a little bit more of your economic data, another good CPI report, really suggestive of a soft landing. And I think stocks, well, could certainly rise to your all-time high for the markets, if not potentially exceed that. At least that's what a cup and handle formation would suggest. And if the soft landing narrative does play out, well, that's what I would think would happen. Now, for a stock like Tesla, Tesla would be potentially the biggest beneficiary of this, because Tesla is obviously a stock on our markets. It's a high quality name. It's a stock a lot of people own, but Tesla also benefits a lot from rates going down and also a strong economy. So if you can get a soft landing, that's like good economy, lower rates. Let's say, for an example, you head into a recession. Well, that's a bad economy. That's bad for Tesla. But lower rates, that's good for Tesla. Which one is better or worse? Well, it depends on how deep a recession is. We don't know how deep a recession is until we're actually well into one. So if you're a shorter term bull, like next 6 months or so, you want to see the soft landing narrative continue to play out. And honestly, I think that's probably the most likely from now until the end of this year. I do think at some point in 2024, you will get fears of this recession coming back, and fears alone of a recession, well, could prompt the Fed to cut rates and potentially try to keep us out of a recession. But question is, do you go into a recession or not? Again, just fears of a recession can cause stocks to fall. Good news for you, if you are a Tesla stock investor, it does not seem like there are great things priced in for Tesla stock. The estimates are really low for 2024, and Tesla stock at $214 per share, again, is not exactly pricing in the greatest things for Tesla next year. Now let's go ahead and get into some more Tesla specific news. And first, before we get into that, I think you guys could benefit from hearing this piece from Gary Black. He says, one misconception I want to clear up. I hear many comments that because institutions get judged every day on results, we tend to overlook the huge value creation inherent in long-term initiatives like FSD licensing, Dojo, and Optimus. Nothing could be further from the truth. The stock market is highly efficient in valuing long-term incentives in the stock price. If portfolio managers have conviction about the certainty and magnitude of the cash flows from these initiatives, they will incorporate those future cash flows into the stock price. That's the very definition of market efficiency. That's not the reason Tesla institutional ownership is low. Institutions want stocks about which they can clearly understand the fundamentals. Pricing decisions have to make sense. Price cuts make little sense if demand elasticity is near zero. That said, we all believe in Tesla's 25,000 next-gen vehicle, which will expand Tesla's total addressable market. Capital allocation has to make sense. Allocate cash towards highest IRR. Decisions to invest or not invest in brand equity have to make sense. ROI on advertising versus ROI on price cuts. And you guys know Gary Black's stance on this. He thinks the ROI, return on investment, is a lot better if you spend money to advertise than to cut prices. And unfortunately, I do agree with that. Otherwise, institutional portfolio managers throw up their hands and give up on a stock because they can't understand the fundamentals. In my opinion, the biggest reason institutions are underweight Tesla this year is due to the continuous price cuts and attendant gross margin erosion. The price cuts that started in 2022 in Q4 have caused auto gross margins to plunge from 26.8% in 2022 in Q3 to 16.3% in Q3 of 2023. So 10% or so decline. 2024 adjusted EPS estimates are down 41% year to date. While it would be nice, I don't believe portfolio managers are avoiding Tesla because of lack of buybacks. Many high growth companies don't buy back their stock. So while EV adoption continues to surge, most portfolio managers who own the stock have been wrong on Tesla fundamentals over the past year, with auto gross margins and EPS estimates sharply lower. When auto gross margins stabilize, adjusted EPS estimates can start rising again on the heels of the Cybertruck, Model 3 Highland, the $7,500 off invoice EV credit, and FSD Level 4 autonomy. Tesla remains our number 2 position because we believe 1, Tesla auto gross margins are poised to stabilize, and 2, global EV adoption will continue to surge from 12% today to 60% today by 2030. I actually shared this to the X account. Go ahead and give Michael Tyler a follow over on X. We try to keep you guys informed of just broad market stuff, what's interesting, some charts, as well as all of your Tesla stock news as well. Great place to get information over there. But I do agree with this. 60% EV adoption by 2030 is definitely likely at this pace. With that being said, even Gary Black missed what I'm about to say. Tesla raising prices is not even on his radar. It's not even on 99.9% of Tesla investors' radar as far as hedge funds and institutions. When rates come down, Tesla will raise prices. They made it clear it's all about the monthly payment, and that is your big checkmate for 2024. A licensing deal of FSD technology would also be great. That would have, a great reaction to Tesla stock, but Tesla actually raising prices would be big money for Tesla stock investors in 2024. And that's my expectation for 2024. Even if it's not a lot, say the Model 3 goes up $5,000 or the Model Y goes up $8,000. That would be big. Tesla Shanghai production sits at 83,506 for October, and it's the highest since April of this year. Do you remember this news we talked about yesterday where new Teslas started getting listed on cars.com? And the car dealership guy on X says that Tesla's never sold new cars outside of its main website. Elon Musk commented and said, "First I've heard of this. Seems odd." And then this guy, Biofarm the Magnificent, says, "CDG clickbait legit?" He says, "Yes, it's legit. Go try it yourself." And indeed, if you go to cars.com, it looks correct. if you're looking at, I have all miles just anywhere, like Tesla's anywhere in the US, and just under new, there is 1,366 listings for the Model Y and 738 listings for the Model 3. Most of these Teslas are like 200, 400 miles. Probably the transportation, I would imagine, on them. It's kind of hard to tell, but it looks, even if you do new and certified, you still get the same number. So it looks like these are like new Teslas. Probably some Teslas that were actually used as like testers, right? If you want to test drive a Tesla, a lot of these vehicles, that's probably what you're seeing. And even if you narrow it down to dealership, you're still looking at 738 Teslas. So yeah, it does look like that is correct. Tesla is selling Teslas now through at least one third party, and that is cars.com. Although it's not a lot of Teslas relative to the production and delivery rate Tesla has, it's probably something Tesla is trying to do to feel out the water and see if it's actually worth doing. Here is an up-close picture of the Cadillac, the Celeste EV, that is $400,000. Sawyer Merritt says this EV does not scream a $400,000 vehicle to me. Polestar has unveiled the Polestar 5 EV's final production design for the first time. Sawyer Merritt asks, do you like it? Honestly, I do. The problem is there's not enough of them being built, and there's not enough demand for other automakers. I mean, Polestar, it's a pretty attractive vehicle, relatively speaking, and I think if you're a fan of the Cybertruck, you're probably a fan of this, kind of the hard edges, futuristic kind of look to it. And some of the price tags on these are just ridiculous. And here is the full lineup of the Polestar vehicles they had at Polestar Day today. And quite a few different concept models, especially this one's pretty cool, but to actually hit the mass market, it's probably never going to happen. And Tesla has now removed the $250 referral discount the buyer gets. Instead, you now get 6 months of free supercharging, but only for the Model 3 and the Model Y. The Model S and the Model X get 3 months free of FSD now. The referrer still gets 10,000 credits no matter what the new vehicle the buyer chooses. And it looks like we're getting a little bit more clarity on the overall China production numbers for October. Again, it was 83,506, and about 28,000 of these are the new Model 3 Highland. So Q4 is going to be epic. It looks like the Highland is scaling faster than a lot of people expected. That would be about 1,000, roughly, a little bit less than 1,000 Highlands coming out of the factory every single day. Specifically, to get a little bit more nitty gritty, if there was 28,000 Highlands that were produced at Giga Shanghai in October, that's 903 vehicles a day divided by 24 hours. That is 37 and a half Highlands every hour. That's putting it to about 2 minutes, roughly, a little bit less than 2 minutes per Highland. That's a pretty quick ramp for something that just launched a month and a half ago. You have also seen the biggest flip of bull bear sentiment ever recorded. This is using the AI investor sentiment that went from 50.3% of investors that were bearish to only 27.2% within the course of a week. So the bears, well, not a lot of bears are left. That means we are vulnerable in the short term to pullbacks, but that's really not happening as of lately. But this downgrade of US government debt well, could cause a pullback. Moody's has cut the U.S. outlook to negative, citing deficits and political polarization. We went over this a lot in the last video, so we're not going to cover it too extensively here. There's two things when it comes down to debt ratings, especially government debt ratings. You have your negative, your stable, your positive, right? Your overall outlook, and then you have your actual rating. So Moody's kept the rating at AAA. They're the only agency to still have a AAA rating on U.S. government debt. So this was just Moody's cutting the outlook to negative. So it wasn't as big as some of the other downgrades we have seen in the past. Notably, in 2011, S&P downgraded U.S. government debt from AAA to AA+. This caused a 6% drop in the NASDAQ, a 7% drop in the S&P the day after. And as of recently, Fitch downgraded U.S. government debt August 2nd of 2023 from AAA to AA. This caused a 2% decline the day of for the NASDAQ. It was 2.2% and did subsequently cause a 10% pullback from August 2nd, 2023 to the lows. Now, back in 2011, it was a 16.5% pullback. This downgrade from Moody's does not seem like it's as bad as the Fitch and S&P downgrades, but it's still pretty significant, and I would expect that it's not going to be positive for our markets. Tesla is seeing search trend activity sharply increasing today for the Model 3 from 60 to 65. The Model Y is actually trending down from 51 to 50, and the Cybertruck's trending down a little bit as well from 26 to 24, but the Model 3 definitely seeing the love today. Overall, very good numbers that we are seeing as of right now. New inventory numbers staying pretty consistent for the Model 3 basically each and every single day. The Model S and the Model X upticking a slight bit, and your Model Y is actually falling a little bit. And Tesla continues to run about 300 ads, mostly for the US, a couple for Europe, and a couple for Australia. Now, just a brief look at the technicals. Like I kind of said in the beginning of this video, you're almost in no man's land. I think you need to get the inflation report out of the way. I think you need to hear how the economy is doing. Once we have more clarity on those things, then it'll be easier to see which direction Tesla stock is going to be going in. I would say at this point, the fears of Tesla unionizing are way overdone at this point. The markets have priced that in plus some. I think there's probably room for an upside move here, especially as the markets start to anticipate lower rates, but it's just too hard to tell as of right now. I will tell you one thing. From 220 down to 200, it looks like there is a lot of demand, especially when you get to like 205. A lot of demand comes in. And I would expect 205 to remain some relative support unless we get some bad news, bad inflation report, bad economic data, things of that nature. Now, if the economy were to theoretically head into this drastic slowdown, then you could end up falling down to the mid 100s. The 150 level would be like your ultimate bottom. That would be your ultimate buying opportunity. I don't think you're going to 100. I certainly don't think you're going back under 100. I mean, it would take something very bad happening out there, and I just don't foresee that. When the debt bubble bursts one day, 5 to 25 years from now, that's going to be a big problem, but it's not today. 150 would look like your ultimate demand zone, your ultimate buy zone. Anything around 180, 190, I think is a strong buy, and anything under like 170 is just a no-brainer, right? Even buying at these prices, I've been buying at these prices, but I do think when those recession fears come, you could end up in this range ultimately, because again, Tesla is mostly affected by what happens in the economy. Who cares if rates are super low? If everyone's unemployed and nobody can buy a new car, does it really matter if rates are low? Probably not. And that's the best way to think about this. But from now until the end of this year, I am pretty dang bullish. As long as inflation comes in good, as long as the economy is not deteriorating, then I think it's safe to be pretty bullish. Safe, relatively speaking. I'm not a financial advisor. I'm not a financial planner. I just think the stock wouldn't continue to fall at that point. But at some point in 2024, recession fears will come up, stocks will fall, in my personal opinion, and Tesla will as well. So I personally want to have a lot of cash on the sidelines, but I'm not going to not take advantage of Tesla at 214, right? I'm not going to look back 6 months later if Tesla's $400 and say, why wasn't I buying at 214? Absolutely, I'm buying here at these prices. So let me know what you guys are doing down below in the comment section. Even if you look at some of the technicals, like short-term technicals, like the RSI at 42, anything under 50 is technically negative or oversold. So you're definitely at those levels already. So, I mean, it's hard not to buy at these prices. Let me know if you are buying down below in the comment section. Actually pretty curious how many of you guys are actively buying now, if you're just saving cash, if you're waiting for a better buying opportunity. I would love to hear those opinions. Now, if you guys want to take it a step further, come trade with us live in real time. Come ask me questions. Come get my thoughts, my opinions on different stocks, different sectors, Tesla. You get notified every time I make a trade. Well, link down below in the description of this video for that one. You guys enjoy the rest of your day and your night, and I will see you in the next one.